Hi, today we're going to be talking about the digital world of currency, the Forex market, and cryptocurrency. So you might be asking yourself, what does this have to do with code? Because this is a coding YouTube channel and technology YouTube channel, right? Well, to give you a hint, anything digital is easily processed and interacted via code. Anything non-digital takes a bit more work because more complex infrastructure is needed to deal with it in addition to the code. So you'll have to set up equipment in order to deal with it. And because it's digital, a lot of what you can do with money, you can create programs that'll help you generate more money, to put it simply. Okay, so now let's quickly look at money. What is money? We hear a lot about it every day. If you have too much of it, a little is nothing. If you don't have enough of it, a little is a lot. Um, some people say it's just an object that different people have agreed upon that has value. And I have always found it a little bit strange that the people that run our country and the people in parliament tend to have it in excess. So you would rarely hear about the exception of a person that lived a normal life that is making the rules with surrounding money. But those are just a few thoughts with regards to it that I decided to throw out initially. So let's look at the origins and evolution of money. What is it? Initially, in the beginning, we needed a way to get resources, um, generate resources, and distribute those resources. In order to develop resources, calculated slavery and collaboration, which was left often used, was utilized by many countries and tribes. Records exist in Egypt and many other countries where they use slavery in order to build infrastructures for storage, as well as farming, etc. This is because in the beginning there were no resources, processed resources that people could use in order to trade for labor. So oftentimes they used force, raids, or they were stolen through conquering and pillaging. But as people got more of these resources and more was produced, people started to trade objects of value for other things of value. For example, they would trade furs for food, work for housing, etc. These were termed commodities, and exchanges occurred between people in set places, or they would just go over to your house and you trade it over. A downside to this was that if people didn't like you, they wouldn't trade with you, or they would increase the prices. So a lot of bargaining was involved with regards to this. This was before money even was used. So now, no one knows exactly who invented money or the first culture or place that invented money. In fact, it seems to have developed independently in different countries. However, initially, what we do know is that it was produced from materials of value in exchange for other things of value. So, for example, they would use steel pieces and they would trade these steel pieces. Initially, all the pieces of a side had the exact same value, and it was sort of an estimate because they carved these up by hand. And it was only accepted by a few people. And it didn't have any brands or anything, it was just the raw materials. But what this allowed for was indirect trade. However, eventually they realized that trading objects of different sizes in order to get other things could get pretty heavy, collecting these pieces of steel or other materials. So it eventually branched out into having pieces of different values. So you had brands on them that allowed people to distinguish how much those pieces were worth. Rulers and kings enforced a wide use of money through laws and utilizing gang-like methods, and troops to enforce tariffs and land taxation on the citizens. This actually spread the use of money, and there are records of this in historical books. So the citizens had to come up with this material and give it to the government, to their rulers, or they would be harassed and their property destroyed. This gave rulers a way to enforce control and minimize the growth of independent self-governing bodies, because if it created dependency. Eventually, they started branding the coins to distinguish the currency of one ruler from another, and this is why oftentimes you'll have gold coins with different signias from different eras, and other material coins. So let us continue. As society sophisticated, banks appeared, and they were used to hold and regulate currency as the rulers delegated this responsibility first for its own resources and then for the citizens as well. Accounting and reporting of your expenses rose in importance for citizens and the corporations or organizations that provided services. Banks, the bank, which was initially one bank that was used, which was an indirect body of the government or ruling party, split into many regulated banks, all extensions of that main bank, which the ruling parties used to regulate the currency because they all saw the importance of this. As time continued, indirect trade of commodities via the bank became possible as the model to generate money evolved. It was initially only allowed between big businesses, and then eventually it was opened up into the public. These transactions were handled by middlemen or actual physical people. I'm deducing these on a side note. This is how I sort of figured it from a high-level standpoint by going through the thought process. You might know something different. Feel free to comment about it. Then what seems to have happened is that rather than carrying around these steel coins, which got pretty heavy, and raw materials, which was expensive to produce, they started storing these materials at the bank and handed out paper notes that represented the physical material. In most cases, which was gold. So this is why if you look into politics and stuff, you'll often hear about them talking about the gold standard, because all this paper we carry around, paper notes, once was representing a physical gold that was stored at the bank. Utilization of notes for exchanges or paper money became ineffective because much of it disappeared due to mishandling and getting damaged or lost. So while they were trying to track it, and it was good for the time and it actually worked, the actual accuracy of it and monitoring it on a large scale became questionable because they never knew exactly how much existed. They just knew how much they printed, and even then, people were copying these notes, right, and making fake notes. This was before the advent of computers. Furthermore, notes for exchanges were used not just for money, but also for commodities. So you'll also hear about at the stock exchange that they used to have little pieces of paper and contracts that they would trade, and a bunch of people would be there, and they would sort of shout out prices in order to buy those contracts. And there were stock exchanges that were used in order to do this, where a lot of people would participate in this indirect trade of raw materials like sugar, gold, copper, and other things. With the advent of technology, things changed completely. When computers came around, you no longer had to carry around notes. They realized that you could carry around cards and use these cards in order to commit transactions like debit cards and Visa cards, rather than handing out physical notes. Because a lot of these transactions were digital, it reduced the amount of work and record keeping tremendously compared to before. And even the stock exchanges and stuff moved online. Exchanging and tracking of everything financial began to move into the digital realm. Prior, it used to all be done on paper, and accountants used to have a lot of work to do in order to track all this stuff, and they would have to generate these reports for the government. However, it still was difficult for the bank to store all this information or all this physical items. So detachment of the currency from physical items began to be started to begin. So they moved away from the gold standard because its use seemed ineffective for controlling the budget of the entire country. I think this happened around the 70s in the States. And furthermore, with the move of the stock exchange and currency to the digital realm, instantaneous intercountry trade of products and currency suddenly became a possibility. And that changed the game completely. Because before you would actually have to have people as middlemen conducting that business on your behalf. Commodity and stock trading moved online and the middleman disappeared. And then more recently, in the last couple of years, something called cryptocurrency, which we'll be discussing, appeared in a big move to eliminate the currency's link to the physical items completely. And the evolution of money continues. So that's a brief history of money so far. So where are things going? I think cryptocurrency is the future. Completely digital currency makes sense because you're going to be able to track everything, generate more accurate reports. And furthermore, it's self-verifying. So you don't need accountants to go over it in order to verify the numbers. You could just have a program do it, because whenever people are involved with verifying stuff, you have the potential to fudge the numbers, because that's what people do, right? Because everything that is handled by people becomes inaccurate because people make mistakes, and the more mistakes you deal with, the more inaccuracy you deal with. However, the banks don't like the fact that a lot of the digital currency is self-verifying. Because they regulate it. So whenever they find they have too little, they could print out more money and keep more for themselves. Or if they find that certain sectors are suffering, they could print out money and give money to those sectors that they feel are struggling in order to keep those vital services in working and providing for the community. Of course, this is a little bit more complicated than that, because they also take tax money, right? But that's another story. So as a result, some countries actually banned the use of cryptocurrency. For example, Putin said cryptocurrency is illegal when Bitcoin, which is a type of cryptocurrency, came into existence, and that actually hurt its growth in the beginnings. But I still think it has potential if the banks and other organizations are willing to back it. Okay, so the Forex market. What is the Forex market? Because I said I was going to talk about that, and I will. Well, it's short for the foreign exchange market, and allows you to trade currencies between countries instantaneously. These days, because it's digital. You trade something called currency pairs, which is like so you'll trade something like the USD CAD, which is the US currency value over the Canadian value. And then you'll buy these things called contracts, which represent the actual money. And based on how the market moves, you'll either earn, that contract will either grow on money because it's playing on the difference in value between the two currencies, or it'll shrink in value. It is unregulated, so a lot of markets are controlled by the banks, like the stock market, or the futures market, or and there are others, but this is not as regulated. You might have seen this chart in many circumstances. This is a chart that represents the values of the euro in respect to the USD, or the US dollar. People often use these charts in order to guess at where the market is going. The main methods of analysis in order to generate or guess where the market is going is technical analysis and fundamental analysis. Technical analysis involves looking at patterns in this graph. So they have certain patterns that they look for, like a head and shoulders. And what usually happens after you see a head and shoulders pattern is it will drop in value. Not always, but more often than not. So they play on these statistical patterns in order to guess where the market is going and make money off of that. The cool thing about the Forex market and many commodity markets is that if you know where it's going, you can make money either on whether it increases in value or whether it decreases in value. And fundamental analysis. Fundamental analysis looks at the underlying economics of the currency in respect to each other, what's going on in the world, and using that, you can sort of determine where the market's going. In general, people use a combination of both in order to make money off this market. So issues, there are incentives for governments to back businesses that serve their interests, because you have to remember, this is, even though this is an unregulated market for the most part, um, the government does control who sets the value of the money, right? You get a bunch of these results, people generate reports, and they release numbers, and that determines where the different currency values, the value of the different currencies in respect to each other. So, who's going to know the most about what's going on in the economy? The government, of course, and the banks. And because of this, they'll be able to, they're the ones that are setting the values of the currency, basically. Furthermore, they're competing against you. So as a result, they can see every single trade you make, because they're also, in general, all the transactions go through them when you're trading these contracts. And because of this, they're going to want to take more money, because it doesn't serve them if you're able to easily make money off this market, because they need to earn money in order to make things operate. So they'll compete against you, and that makes it a little bit more complicated. Furthermore, with regards to technical analysis, the patterns don't always work, and the way things work changes over time. So you have to change your strategy more often than not and determine what works and what doesn't. Another thing is that it's easy for big money to manipulate the value of currency, because they can see all your trades. So of course they're going to manipulate it in order to maximize what they take away and what they can keep. But a bonus is that it's open 24/7. But here's the catch. Let's go back to the issues. We have these things called market makers or brokers, and there are no laws that prevent them from betting against you and taking the alternate side of the trade, because if they know that the market is going to go, if they know they can make money off pushing the market in a certain direction and taking your trades, they can. Because oftentimes, if you don't have enough money in your Forex account, they could liquidate it by pushing it down past a certain value. Or if you have something called a stop loss, which is the minimum amount, the maximum amount you want to lose before automatically selling it, they could see that and push down the market to hit that stop loss and take that money. Okay, so now let's look at the government. In Canada, they take 50% of the profits you make from any trading. So if you make money in Forex, they're going to take 50% of it. But if you lose anything, they're not going to give you anything. So that seems a bit shady, but they're trying to prevent the gains. I think Canada is a country that is less conducive to earning, to getting rich, if you understand the system. In the States, you pay nothing because it's not regulated. It's not regulated in Canada, but they still take 50% because they love money. And their taxes are higher in Canada. Very few people win by playing the Forex market, less than 10%. I'd say it was less than 5% last time I checked, but and it's pretty clear why, because a lot of what they teach you doesn't work or it changes. And there are a lot of gamblers that go into the market. This is because big money moves the market in such a way that it'll hit your stops, and it's well known. They have been a lot of lawsuits and stuff with regards to that when it was identified as people rigging the market intentionally. And you could even see it sometimes when looking at the markets. So if you don't know what you're doing, I suggest staying away from the Forex market, because you have to understand it completely before you can make money. I've actually tried it and I've lost a little bit of money doing it, but I know when to walk away. If you don't know what you're doing, it's no different from gambling. If you do know what you're doing, the gains aren't as big as how they say it is. Now, cryptocurrency. As we talked about before, there's several types of current cryptocurrencies. Bitcoin is one of the more known ones, but there are other types called like Ethereum um, and other cryptocurrencies that popped up. Each have a value. It's self-verifying ledger, so they know exactly how much is in circulation. There is no paper. It's purely digital. The output on how much currency is in circulation is controlled. You can do something called mining by running a program on your computer to generate more of these digital dollars, and they actually have value because you could trade them in for actual money. It's outlawed by many countries and controversial. It seems to be having issues picking up, but it's totally anonymous. That's another good thing. So if you do take that money and spend it or exchange it between people, no government is going to be actually able to see that you had that money. So it's hard for them to tax. And it has its own trading market. But if you go through a trading market that is controlled by the banks, of course, they're going to report it back to the government because the government, even though they might say a lot of banks are self-regulated and stuff, the governments and the banks are a team. Let's face it, because that's how it initially was, and they share a lot of information. So they're going to report that information back to the bank, to the government. But it is a growing technology. If you went back to 2017, the value of Bitcoin was under $100. I actually had some Bitcoin back then. I sold it though since. Then it jumped up to over $20,000 for one Bitcoin, which was easy to mine or to purchase at that time. And then right now it's hovering around $9,000. But whether it'll go up or down is up for regulatory bodies of the countries. And it's countryless. And it's not dependent on the economy, right? So if the economy goes down, its value will go up, etc. So your money is a little bit more safer in it, even though because it is controversial, a law change can hit its value big time. So yeah, that is a brief introduction to the Forex market, cryptocurrencies, and money. And because these are all digital, you can create something called bots that will trade those and generate money for you if you know what you're doing. And I think I'll make a tutorial on how to do that at a future date. But for now, I hope you enjoyed this quick introduction to cryptocurrency, the money, and things surrounding money. Until next time, bye.